Ted, it looks like we've got some bad news, I guess, for Americans carrying credit card balances in that those balances seem to be getting larger for the majority of people carrying them. Is that the case?
That's right. Yeah. Unfortunately, about three-quarters of people with credit card debt have added to it over the past year. The New York Fed says that total credit card balances are up 15% year over year. We see more people carrying debt, 46% of cardholders versus 39% a year prior. I definitely think that high inflation and higher interest rates are a big part of this.
What percentage of Americans actually carry a balance on credit cards from month to month?
It's 46% of credit card holders, 35% of all U.S. adults, if you factor in that not everybody has a card. It's about three-quarters of U.S. adults have at least one credit card. But yeah, among cardholders, roughly half and half carry debt from month to month. It's really expensive debt, unfortunately. The average interest rate is 19.93%.
When you look at the demographic breakdowns, is there any one group in particular that is struggling the most with their credit card debt today?
We've actually seen young adults adding the most to their credit card debt over the past year. Interestingly, though, it's Gen Xers who have the most credit card debt, but millennials and Gen Zers are catching up, unfortunately. From an income standpoint, it tends to be more of a middle-class problem. Some of that, I think, is access to credit. Lower-income households don't have as much access to credit. But interestingly, even among those with six-figure annual household incomes, even there, about 40% carry credit card debt from month to month.
What are the reasons that you're hearing from people about why their credit card balances may have gone up in the last year?
Especially in the past year, I think inflation is a huge part of it. Just the rising cost of living, day-to-day expenses outpacing income. In general, we actually see that emergency expenses are usually the primary cause of credit card debt. So that would be an unexpected medical bill, home repair, car repair, something like that. But especially the past year, it seems that day-to-day expenses and inflation have been the biggest driver.
Any bright spots in what otherwise is, kind of a depressing report here?
There is some good news just in the sense that people are keeping up with the bills. Delinquencies and defaults remain very low. Even though they've ticked up a little bit, they're still very low historically speaking. The debt-to-income ratio is quite low compared to history as well. I think we can really credit the strong job market with a lot of this. And it's kind of amazing how much people have been able to absorb this higher spending in general. I do think there's that K-shaped economy going on, and it is more of a struggle at the lower end. But what I would say to people is prioritize your interest rate if you have credit card debt. Get that 0% balance transfer card. A silver lining there is those are widely available. Terms last up to 21 months. Maybe consider a low-rate personal loan or nonprofit credit counseling. I mean, there are things you can do, but because credit card rates are so high, I definitely think it needs to be a priority.
Very good. Ted, appreciate you joining us today. Thanks so much for the time.
Of course. Thank you.
That is Ted Rossman from Bankrate talking about Americans and the way they're currently using credit cards.